Morning, guys. Happy Friday. It's May 2nd, 5:29 a.m. Central Time. Grain markets are mixed to higher this morning. Matt Bennett is here. We had some news out of China overnight. Why don't we start there?
So, China is evaluating the possibility of trade talks with the U.S. China's Commerce Ministry said last night that U.S. officials have expressed their desire to talk to Beijing about tariffs while urging the White House to show sincerity toward China. The ministry said in a statement, the U.S. has recently sent messages to China through relevant parties, hoping to start talks with China. China is currently evaluating this. The news marks a potential shift in the ongoing U.S.-China standoff. Chinese economic data released earlier this week indicated that factory activity had its worst contraction since December of 2023. Meanwhile, U.S. consumers are becoming increasingly aware of tariff-related price hikes.
I don't know that China wants any part of this trade war much longer. Bloomberg also reporting very early this morning that China is stealthily exempting about a quarter of U.S. imports from the tariffs. So China's got economic problems. Their businesses can't handle the tariffs, I don't think. So is this the beginning of the end to the U.S.-China trade war, Matt?
It sure seems like it. It's pretty interesting here lately. You hear whispers that we're talking, or whatever. And then on the other side, China says we're not bowing down to those suckers, And I mean, you knew darn good and well that once some of these your ship traffic goes down, and they're not selling as much stuff, that they're going to have to do something. And so, I mean, yes, you could get into a political discussion, but you and I both know, Joe, that they are going to have to come to some sort of an agreement here to where China doesn't feel the pain that they felt here over the last couple 3 weeks, and they know it's more to come. That it would be more to come. So I also heard ethanol, supposedly they dropped the tariff on that as well coming in, and so yeah, absolutely, I think it's the beginning of the end, but it's I think it's like people dating right now. It's like, oh, we're in the talking phase, or we're snapping or something. So it'll be interesting to see how it progresses.
They don't talk anymore. They Snapchat and they Tinder. That's all they do.
I think Snap's the first step.
Is that how it works?
Right. I think so. That's what my kids say.
Kevin Hassett was also talking yesterday.
Yes, and he is hopeful for trade negotiations with China. During an interview with CNBC on Thursday, he acknowledged China's past unfair trade practices. He also expressed optimism about the future of trade negotiations with the country, as just last week, China removed tariffs on several U.S. products, including semiconductors and pharmaceuticals. Hassett did not confirm whether President Trump has spoken with Chinese President Xi Jinping.
Let's go to some soybean stuff. China has been the largest buyer of U.S. soybeans this past or current marketing year. We know that. But I pulled this chart. Here's new crop U.S. soybean sales to China, and they have bought zero new crop U.S. soybeans on the books. They also had zero the same week last year. And Matt, I remember having these discussions with you last year at this time about new crop beans to China. And we were wondering, like, are they going to buy beans? Is it a situation where it's just not going to happen anymore? And then it did happen eventually. But if you look at the chart, like usually by now they've got something on the books.
Yeah. I mean, there's years they've had a ton on the books already, but last year, I mean, I believe we were a couple months farther along and they still hadn't bought anything. We were fairly close to harvest, and you and I are like, good Lord, they're gonna have to do something sooner or later. And then you get into fall and it's just like gangbusters. They bought beans like it was going out of style. So anybody who says, hey, because they haven't bought any right now, good Lord, go back 1 year. Let's not sound the panic alarm just yet. I mean, you and I both know a whole lot can happen very rapidly. If they want to buy U.S. beans because U.S. beans are competitive on the world market, when they are, they're going to do so.
And the seasonal trends are probably changing in real time as Brazil becomes a bigger producer. You've got to think maybe this just becomes a regular thing that they start just a little bit later than maybe they did 5 years ago. That makes sense, doesn't it?
Yeah, no doubt. It would make a whole lot of sense. And I think a lot of our seasonal price trends, on the other side of things change as well. I mean, Brazil's the biggest grower of soybeans. We know that. And so there's no doubt that a lot of the trends that we've known over the last 20 years, we're going to have to reevaluate.
Yeah, Pete Meyer has talked about that quite a bit with us in the premium stuff, especially as it relates to soybeans and crop scare events. Like maybe now your bigger crop scare event in soybeans happens annually in like November, December, rather than July, August. And I guess that makes some sense. We had some farm machinery news out yesterday, and that's not the slide I wanted to start with.
So
Go ahead.
tariff related uncertainty has contributed to a significant slowdown in farm machinery sales. On Thursday, CNH reported a 23% year-over-year decline in first quarter sales, while AGCO reported a 30% drop. Both companies attributed the decline in sales to the potential for reduced export demand for U.S. crops, a factor that is pressuring an already struggling agricultural sector. Despite the weak sales, AGCO shares climbed 10% and CNH shares increased by 7.3% yesterday. Even though the U.S. government is providing $10 billion in financial aid to farmers, the assistance is not expected to drive short-term demand for equipment. AGCO reaffirmed its full-year sales outlook, whereas CNH projected a sales decline of 12 to 20% compared to last year.
Sorry, guys. I had a couple of slides that mysteriously disappeared. Here's AGCO quarterly net sales, and they started to drop off first quarter of last year, and they've dropped off continually since then. Here's CNH, very similar type story. Now the share prices, and here we go. The share prices have actually recovered quite a bit. You had a big sell-off into like March and into April, and now you've recovered. I think that's more of a broader stock market thing, but the equipment market is in trouble, Matt.
Right. I think it's a broader stock market thing. I also think it was kind of seeing what was going on at the time, kind of forerunning what this market was going to look like. I read that. Actually read that whole article. I thought it was a darn good article. And basically what they're talking about is, in the past, the amount of combines that were owned out in the countryside, you would think that, relatively speaking, you'd have like 1/10 of the combines now based on the fact that what they're able to do. And I believe there's like 1/4. And so people, what it boils down to is, let's say, Joe, you farm 2,500 acres and I farm 2,500 acres, but we both want to own an X9, because why? Because we want to own an X9, right? And so, I'm not getting on people. I totally get it. I know that speed of harvest is something that you want to do, but at the same time, are we as efficient as what we need to be? And the article was kind of addressing that that's really not the case, and that this equipment market is certainly changing. And whenever you get into these tough times, it makes it ever so hard for these growers to go out and say, hey, yeah, I can trade my 1-year-old combine for $120,000, $100,000, whatever it might be. That's tough to do right now in this environment. It's almost impossible.
Yeah, a lot of things are going to change if the farm economy stays weak. My friend Chris Barron tells me that machinery, generally speaking, is the second largest line item expense for most farm operations. So it's a big deal to our crowd here. Let's go to the drought monitor.
So drought conditions across the Corn Belt have significantly improved in recent weeks, with just over 6% of the region experiencing some level of drought. Over the last week, conditions improved in portions of Iowa and Minnesota. Precipitation across the High Plains was variable last week. Rainfall in Kansas and Oklahoma contributed to improved drought conditions. Notably, conditions in Kansas saw a significant improvement over the last week, with approximately 37% of the state now experiencing some level of drought, down from 64% the previous week. Improvements were also observed in South Dakota and North Dakota. When we look at the percentage of U.S. areas experiencing drought, corn country, 20%, soybeans, 15%, winter wheat, 23%, spring wheat, 37%, and cattle country, 31%.
What have you heard on planting progress this last 4 or 5 days, Matt?
The last 4 or 5 days have been just a little bit slower, in our part of the world, especially. I do think that Eastern Iowa area, some of those guys got to going again. And so we've talked to a handful of those guys that they were late, actually. Late compared to the rest of Iowa. Some of those guys hadn't turned a wheel. And then this week, I think they've been running pretty good. One of my bigger growers in Western Illinois got done yesterday. And so, he's like, how far along are you? I'm like, why don't you freaking come over here and help me? Because literally we're 25% maybe. And so I think you're going to see some progress again next week, but again, it's kind of hit and miss. Some areas have been able to go like gangbusters, some not. And so I think you're still going to be kind of bordering on a record pace, but I don't think you're going to have a record pace. It'll be above the 5-year average, probably below last year.
Here's expected rainfall over the next 5 days. Most of it's going to center on kind of the southern plains, mid-south, and then eastern Corn Belt. Your part of the world, Matt, you may be in that little reddish area in Illinois. A lot of the west is going to be dry, though. So is this going to be the 5 days where Iowa catches up and a lot of those other people catch up?
Yeah, I believe so. I think before this week, actually, a lot of these guys were forecasting that after the storm system that we had Tuesday, Wednesday, Thursday this week, we're going to have like a 2 week window open up. Some of them are trying to put some rain in for us, like on Saturday, Sunday. But I think after that, it's supposed to finally open up. So, I'm not really complaining about it with our particular area. I think Iowa, on average, is going to probably have gotten planted as a state
Yeah.
as early as what they typically do, which means, as probably pretty decent things for yield. But, if I get my crop planted by the 10th of May, I'm not too worried about it. Yeah, I would have liked to have gotten all my soybeans in the ground by now, but, you can only do what you can do.
So this is the next 5 days. Here's the 5 to 10. One thing that's noteworthy, perhaps on another note, is the widespread rain that's expected across HRW wheat country in the southern plains. You got Kansas, you got Oklahoma, you got Texas, into Nebraska and parts of Colorado. I think that's a big part of the reason the wheat market's been under pressure here. Let's go to export sales.
U.S. corn export sales declined last week, but remained strong. Net corn sales were reported at 40 million bushels. The print was down 12% compared to the previous week and 13% from the prior 4-week average. Mexico was the largest corn buyer for the week. Net soybean sales were reported at 16 million bushels. The print was up 55% from the previous week and 27% from the prior 4-week average. China was the largest buyer for the week. Net wheat sales were reported at 3 million bushels. The print was down substantially from the previous week and down 24% from the prior 4-week average. Thailand was the largest wheat buyer for the week.
China was the largest soybean buyer of the week, but almost all of it was switched from unknown destinations. So I don't know that those are new sales, but we still haven't seen the cancellations necessarily that we had feared, I guess.
No, I think for the last 2 months, I've been kind of expecting we come in one of these weeks with net cancellations on the week, in totality, and never
Yeah.
have seen that. Actually, soybean export sales have been pretty solid compared to what we thought. Corn export sales and shipments have been fantastic. And so I don't know. I got to think next week we're going to see another adjustment whenever it comes to corn exports. If we don't, I'm going to be scratching my head. But
Is it fair for me to say this morning that the people who said the corn program was a front running program, that they're wrong? Can we say that now?
yeah, you can say it. We've stayed strong all the way through. I think I wondered. Yes, last fall, corn export sales at a time whenever we don't always see them as strong as what they were just incredible. You and I both saw that, and you kind of wondered, hey, is everyone worried about this tariff situation? What Donald Trump's going to do? Yeah. You wondered it somewhat, but at the same time, there's no doubt that if that's what you were banging the drum on, you're wrong. Because this program's just been incredible.
Yeah. Okay. We're going to go to this. I'm having graphic problems today. Mackenzie, let's go to this California story. I'll see if I can get it on the screen.
Alrighty, so California's plan to ban gasoline-powered cars may be in jeopardy. On Thursday, the U.S. House of Representatives voted to repeal a federal waiver that allows California to ban gas-powered cars by 2035. The waiver, issued under the Biden administration, allows the state to impose stricter rules than federal standards to promote EV sales. Overall, it supports California's goal to cut greenhouse gas emissions from light-duty vehicles by 50% by 2040. Other states, including New York and Washington, had also planned to adopt California's strict emission standards. The Senate has until mid-May to vote on the repeal.
If you guys can't see these graphics, I apologize. This story, you wouldn't think California matters, but it does matter because California is the second largest gasoline consumer and therefore the second largest ethanol consumer. They account for 9.6% of consumption of both U.S. gasoline and ethanol. So I guess that, in a vacuum, if you're just, you want to be friendly to corn prices, you want to see California continue to use gasoline.
No, absolutely. And the amount of renewable diesel they've used as well over the last few years has been incredible. But, corn-based ethanol is probably one of the things that we just can't afford to lose that demand. We've talked about that before, but yeah, absolutely. If they block this, there'll probably be a lot of people, clamoring about why they shouldn't be able to. But at the same time, from with the ag hat on, you've got to hope that that's something that happens.
What did cattle do yesterday?
Cattle futures were mixed. Live cattle were 77 cents lower to $1.25 higher. Feeders saw losses ranging from 57 cents to $1.57, with the exception of the May contract gaining 65 cents. Box beef was also mixed. Choice was down $2.14 at $343.17, while select was up $2.26 at $324.28.
Cattle's awfully strong, Matt.
Yeah, question you and I talked about the other day, and I'd be interested to see what Kenzie thinks. But you take April off the board, it's trading up there around 217. Obviously, cash prices are on fire for fats, and so does June go up there into the mid-teens. I don't know. I mean, a typical market, you would see that happen at times. But Kenzie, you think that we'll run up close to those April prices, chasing the cash market?
I think there's a good chance of it, possibly. Like you just said, the cash market is on fire. Yesterday, it already took off, and it's $6 higher than we saw last week. It's just incredible what we're seeing here. I mean, I feel like we're headed for the moon, and there's no roof, but of course there is. We'll just see when that happens.
And that's why I would strongly urge anybody that's got a few pence of fats, just have something under you just in case. I mean, here's the thing. Yeah, you're going to be kicking yourself in the butt if you don't end up covering yourself and then you take a $20 hit. For what reason? Who knows? But when the cattle market goes, it's probably going to go pretty hard.
Outside markets are, I would say, curiously quiet this morning, given the China headlines. Usually, if this was 3 weeks ago, we'd be going crazy on this stuff. And I guess the market's just exhausted. Stocks recovered a little bit. The Dow's up 200. The S&P is up 25. Bonds are up a little bit. Crude oil is down 28 cents in the June WTI. Have a great weekend, guys. Matt, thanks for joining us.
Thanks.
We'll be back next week.